Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. This is where we discuss everything about markets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views to find out where exactly should you be putting in your money. Lots of pockets are really looking at handsome gains right now, be it the defense pack, the railways pack. A lot of subsectors are moving up in trade. So where exactly are opportunities emerging for you as equity investors? We'll find out everything, so do stay tuned. But first up, a quick check on how the benchmark indices are moving at this point in time. 19,600 remains on the Nifty, but it's absolutely flat with the negative bias right now. Volatility throughout the first half of the trading session. The Sensex is down about 16 odd levels, 16 odd points at 65,866. Just about flat with a negative bias right now. Below the surface, the mid-cap and the small-cap 100 indices still holding up onto the gains, and that's where all the action is. About half odd percent of gains coming in, or 0.4% of a move for both the mid-cap and the small-cap 100 indices today. Apart from this, it's the realty space among the sectors that is topping the charts, the Nifty Realty Index. The consumer durable space continues to be in focus. The IT stocks have recovered in trade. The Nifty IT is now up by 0.4%. PSU Bank also follows next with 0.4% gains coming in. Autos and now the Nifty Bank and the financial services have also pulled up in trade from the early morning losses. So that's nearly inching up higher above the flat line too. So that's where what the action looks like. Among the top Nifty 50 gainers, you have Coal India, that's up by almost 6 odd percent right now as the top gainer for the Nifty 50 stocks. L&T trades at record levels, almost 3% higher, 2,800 kind of levels being seen on L&T. Tech Mahindra is up also. SBI Life Insurance, HCL Technologies, Wipro. So the IT names are definitely supporting the market sentiments at this point in time. On the downside, however, when we talk about the top losers on the Nifty 50 index, you will find Tata Consumer Products down in trade. Ultratech Cement, M&M down about 1 odd percent in trade as well. Britannia, Bajaj Finance, HUL. So some of the FMCG names are really not contributing to the markets today. Healthcare names, oil and gas have now slipped into the red. So some of these stocks would be showing you some kind of a decline in today's session. But as far as the top Nifty Bank contributors are concerned, you have SBI, ICICI Bank, HDFC, Federal Bank and PNB now contributing the most to the recovery in the Nifty Bank space as well. Let's welcome our guest on the show right now. Mr. Kranti Batini joins in, Director Research at Wealth Mills Securities. Welcome, Mr. Batini, and thank you so much for taking the time out for this discussion. First up, a quick check on how are you looking at the markets. Of course, we've been looking at 4 straight sessions of gains coming in on the Nifty, but again, there is no clear, direction. The technical charts also believe that, there are strong resistance levels ahead. So before we see another dash to 20,000, volatility could persist going forward. What would you advise investors to do at this point?
Yes, actually, it's a completely liquidity-led rally. That's what we're witnessing in the market. Nifty is trying to inch the strong resistance zone of 19,650. That's where the strong resistance zone at this point of time. But given the kind of momentum that's what we are witnessing in the market, if we can get some kind of fundamental news and support from the global markets, definitely market can withstand this level and cross the resistance levels of the market. We are in a complete liquidity-led market at this point of time, but the more action is in mid and small cap space, and the mid-cap indices is Nifty mid-cap indices is trading above 40,400 levels. So it's very strong market at this point of time. We can see the buying interest that's emerging in all the spares of the market, and the beauty at this point of time is the change of leadership. So one day defense, the other day pharmaceuticals or IT. We can see the blend of bargain hunting that's taking place in this market at this point of time. So bulls are very strong at this point of time, and hope the market can sustain these levels and try to cross the previous highs. That's what we can expect if the same kind of momentum that continues in the market in next few days.
Okay, let's talk about the segments that are buzzing the most in trade. I remember last time we were discussing, you talked about the defense space continues to be an uptrend, and today we are again seeing some of the shipbuilder stocks really moving up very, very sharply in trade. Cochin Shipyard is topping the charts as far as the Nifty 500 stocks are concerned. It is up about 17-18% intraday right now. When we also see, apart from so 18.3% higher at the day's high level clearly, and the record levels being seen. Garden Reach Shipbuilders again about a 12% move for this one. 918, 919 kind of levels being seen on Garden Reach Shipbuilders. Mazagon Dock again as 8% surge in today's trading session. 2053 is the kind of level that we are seeing for this one. You also have Great Eastern Shipping Company that's now showing some move coming in, and it's now up about 7.5% in trade right now. So all these shipbuilder companies are really moving up sharply in trade. Let me tell a little bit more about the movement that we've been seeing, especially in India's shipbuilders over the last few months or so. India's shipbuilders have at least doubled their market capitalization in this year, calendar year 2023 so far. The three stocks we talked about, Cochin Shipyard, Garden Reach Shipbuilders, Mazagon Dock, they've all seen their market capitalization grow between anywhere between 2.5 times to 5 times so far this year. So, Garden Reach Shipbuilders from 4,000 odd crore rupees has now jumped to 10,521 crore rupees as far as their market cap is concerned. So, a 2.75x kind of a jump in the market cap. Mazagon Dock from 8,241 crore rupees, it's jumped to 41,386 crore rupees. This is a 5 times jump in the market cap that we've already seen. Again, for Cochin Shipyard from 5,100 odd crore rupees to 14,700 crore rupees, a 3 times jump in the market cap is what we have seen. So the kind of wealth, the kind of market valuation that's got added to these companies, how do you really look at first of all, if you can break it up for today's move, do you see anything? Is there a trigger that has led to this, intraday move in these stocks? And then we can talk about what's really happening throughout this year and the outlook then.
One thing is actually, on a longer term perspective, we have been quite bullish with respect to the defense and the shipbuilding stocks are concerned as a whole, which comes under the defense sector altogether. And we have been advocating investors on your show from the past more than 4-5 quarters. So the stocks have given a phenomenal returns for the investors. Even whenever there is a dip, we have been advocating the investors to buy at every dip in the names what we mentioned, like Cochin Shipyard, Mazagon Dock, Garden Reach, even in fact the HAL. Okay, so these are the front runners in the shipping as well as defense space is concerned. So the stocks have been rallied phenomenally. So the order book is quite strong for these companies, and also kind of the softening of the steel prices that can add and increase their margins going ahead. And the order book is quite strong, and the earning visibility is quite strong at this point of time. And also recently, as per the data, India has emerged one of the strong exporter in the global stage. That India is one of the key exporter of defense equipment and defense things are concerned in the global space. So these are all helping the market and increasing the visibility, earning visibility for these companies. They are relatively expensive, little valuations look stretched, but for a longer term perspective, definitely given the kind of earning momentum these stocks going to witness and the earnings expansion they are going to see, margin expansion, all these things into consideration. Definitely, defense stocks looks attractive. I don't buy these stocks immediately, but I don't go and buy immediately. Any dip, definitely any profit booking that takes place in the stocks, definitely it's a very good entry level at these valuations also for a longer term perspective. Of course, there will be.
Yeah. So in the pecking order, sir, which stocks would you pick up from the shipbuilder space?
Yeah, the Kochi shipyard recently the government have a plan we already have one aircraft carrier, and the government is planning to induct one more aircraft carrier, and it's going to build by Cochin Shipyard. That's the reason the stock has been buzzing in the recent past. So Cochin Shipyard, the valuations looks decent on a longer term perspective. Any dip in the stock can be a good buy on opportunity for the investors. Even the Garden Reach and Mazgaon Dockyard, they have been doing in terms of the submarines are concerned. So they have also very good order book visibility is at this point of time. Garden Reach has been strong in terms of their order book. So uh, investors with a low risk appetite, they can start from Cochin Shipyard, and as per their appetite, okay, they can choose the names like Garden Reach and Mazgan Dockyard in this order. And HAL is always our all-time favorite. Okay, any dip in Hindustan Aeronautics is a good entry point for the investors at any price level. So one can, in a investors with a staggered manner, they can definitely accumulate stocks like HAL for a longer term perspective. So overall, Sakshi, the defense space looks very interesting, and many of the companies have been joining in this list. We What we are witnessing is names like Bharat Forge, L&T, and also the other metal stocks have been joining the defense space right now, and they're going to get more revenues with the activity in defense is concerned. So investors need to keep an eye on the entire this space. This is a pretty larger space, and it also associated with the developments that are taking place in defense technology, metal technology. These are the subsets of the entire defense pack. So investors, there are some exciting times ahead for this space, and we are at a I can say at a very preliminary stage with respect to the defense is concerned in India. There is a long way to go in terms of the defense as an industry in India is concerned.
Okay, long way to go, and this is at a very preliminary stage, and the defense space is hot like never before. And these stocks can still be considered for a staggered buy. Topics already shared by Kranti right here. Mr. Patini, also wanted to ask you, since you took the name of L&T. L&T today has hit record levels, and this is also after the news report suggested that they have signed a $4 billion order win with the JLR as well, and with the several other companies, and they've been also talking about how not just capital goods. You talked about how they're getting into defense. So a lot of excitement around L&T, which has already been a poster boy of the capital goods in the Indian space, Indian stock market listed space, and now it is foraying into the other segments. Even at 2808, do you think L&T is something that you would want to consider as a buy?
Absolutely, Sakshi. L&T is our all-time favorite for a long-term investment is concerned in the engineering and capital goods space, and now inching into the defense space. So very deep, okay, investors in a staggered manner, definitely L&T, they can add the stock into their portfolio, and the relative valuations of L&T when compared to the other industry heavyweights and also other industry, the market cap heavyweights in the market, L&T valuations looks attractive for us at this point of time, at this price moment also. So any dip
Okay.
in the L&T market tend to give some kind of knee-jerk reactions that is inevitable in the market. So during those dips, one can use to accumulate names like L&T in their portfolio.
Okay, and any upside potential that you would like to mention here?
Uh, Always stocks like L&T, okay, whenever there is a consolidation in the stock price, and also they surprise the investors on a upper side always actually. So investors always can expect a compounded return of 10 to 15% in their portfolios, despite of the market conditions um, uh, on a longer term perspective. The valuations looks attractive for L&T, still at this price range also, given the kind of earning visibility and also the capex cycle that's taking place in India. L&T is going to be the key beneficiary in both infra, capital goods, and engineering as a space is concerned.
Okay, uh, so L&T, that's the view on L&T right now. But the other stock that I wanted to discuss with you is the top gainer on the Nifty index today, and that is Coal India. Coal India has been on an uptrend. It's already up about 4 odd percent on an intraday level. It was up by 4.5% odd. The stock has already gained about 5.5% right now, 270.5. That's the level at which Coal India is really trading at. Clearly, there is high level, and this week itself, Coal India has seen a jump of 12%. For this entire year, it's up by 19.2%. I wanted to understand from you, Mr. Batini, stocks like Coal India and many of the other PSU stocks have suddenly woken up from slumber. And it looks like, for years and years, these were just considered as a pure play dividend counters, which could be kept for just dividend income. But the kind of move that they've been showing have never been seen before, or, rarely been seen before in history. On an intraday basis, such sharp moves coming in, and weekly moves, yearly moves that are being seen. How would you really look at Coal India and the current momentum right here, looking at the entire discussion around the energy space right now?
Actually, that's the beauty of the bull markets. When the markets are rallying on a higher note, the stocks which are in slumber, but fundamentals are relatively good and strong, and the valuations are attractive, those stocks tend to be rally in these kind of bull market phases. And Coal India is a decent company, but the ESG norms with respect to their carbon emission and also the kind of the foreign portfolio investors, they have been showing some resistance investing in names like Coal India. But in a bull market, what happens is we tend to see some kind of buying interest emerges in these kind of companies, despite of the cautionary notes, some kind of ESG norms that's going to stop them. But because of the relative valuations and the dividend yield and the strong business models is concerned, Coal India take that advantage. That's what we are witnessing, some kind of buying interest in Coal India. But in the even though India want to be in next 50 years carbon neutral and zero carbon emission, but country like India, which is emerging and consuming more energy because of the growing prospects of India is concerned, we are growing at an average of 8 to 9% on a longer term perspective. So our energy needs will definitely go up. Of course, we do have the alternative energy and the green energy, but the thermal energy is going to be play the prime role going ahead. So Coal India remains under on focus always with respect to India's economy is concerned. So for a longer term perspective, definitely with the dividend yield and the stock growth is concerned, investors can accumulate stock like Coal India. This is suitable for a moderate risk appetite investor. Sometimes, as you mentioned, the stock can get into the slumber mode also. But for the long term, low risk appetite investors definitely can buy Coal India on dips.
Okay. Well, many thanks, Mr. Batini, for being with us on the show and discussing such wonderful insights on the defense story and other stocks that are in momentum. Great to have you with
Thanks,
us on
Sakshi.
Business Today
Always my
TV.
pleasure.
As always, let's look at the markets again. They're picking up pace once again, 52 points higher on the Sensex, 65,936. You're also looking at 66,000 fast approaching there, 19,630 currently on the Nifty, 18 points higher with a positive bias. Which are the stocks that are contributing the most on the Nifty? Well, you can clearly see L&T contributing about 21, 22 odd points, Coal India contributing 7 to 8 points right there, HDFC Bank 4.4 points, TCS, HCL Technology about 4 points each, Tech Mahindra and SBI contributing about 3 and 2 points each on the Nifty index right now. Coal India is the top gainer, now 6% higher in trade. And you can also look at L&T, Tech Mahindra, SBI Life clearly as the other top gainers. On the NSE 500, it's Cochin Shipyard, Great Eastern Shipyard, and also IRB Infrastructure, Devyani International, IRFC. These are the top gainers on the Nifty 500 index as well. Now, as far as the F&O space is concerned, again, Coal India is the top gainer on the F&O space, followed by United Breweries. GMVF and Gujarat Narmada Valley Fertilizers. You also have you have Page Industries and also Power Finance Corporation as the other top gainers. On the sectoral action, increasingly, the breadth of the markets is improving as we inch closer to the second half of the trading action, barring metals, FMCG, healthcare. Rest of the sectors are all up. Mid caps, PSU banks, realty, the top three gainers right now as far as the markets are concerned. So with that, we'll wrap up this special edition for you, but we'll continue to track the market so you can be with us. What you should also get ready is for a special series, that's Market Masters, where our market gurus reveal their investment strategies for a winning portfolio. So join us on this coming Monday, that's 11th of September, with Atul Suri, who's the CEO of Marathon Trends PMS, to get his market insights and in-depth market analysis. You can also send us your queries on this number that's flashing on your screen, 730-308-0488, and these questions will be taken live. The company on our focus today is Gokul Das Exports, and the company's management is joining us now.